that Monday. What's up, everybody? Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody's had a great day. You had a great weekend. You're ready to kick off the week in style as we put a little bit of hope in our markets rallying up last night. But that hope was quickly dashed as we saw the sell-off just continue to run down all night. You know, when I looked at the markets to start off last night's live trading session, we were up about 12. As it stands now, we're down about 20. So a pretty big turn of events in where we saw the S&P and the NASDAQ move from where they opened up. But if you're new to the channel, do me a favor, click the subscribe button, hit the notification bell, hit the thumbs up icon to show the computers that you're actually watching this thing. We really, really appreciate it. And so we're going to do what we do every day. We're going to look at our big four markets, and then we're going to look at our stock of the day. So before we go any further, let's look at the big picture. So in our big picture for today, remember, the big picture is always the S&P, the NASDAQ, crude oil, and gold. Those are the four that we pay attention to. And last night in our live trade room, we were taking a look at the S&P. And the S&P had gapped up. So let's go look at what it looks like right now. If I open up the S&P, you can see that last night we had a move up. And the move up that we had last night from here to here, this is what's called a gap for those of you that are fairly new to the world of trading. A gap is the difference between one day's closing price and the next day's opening price. And I say 1 day, it's really one period. So this was Friday when we closed the market at 3:15 p.m. And then when we reopened the market on Sunday at 5 p.m. And so the difference between there is called a gap. Now, oftentimes, what traders will do is look for what's called a gap and go. And when it gaps in the direction, trading it in the direction that it is gapped outside of the prior day's range. Well, in this case, we gapped up. But our predominant trend on a 4-hour is still down, and thus giving us an opportunity to say, you know what, we gapped up, but I think there's a better chance to trade this thing to the downside. And so we did drop back down into this line of support, bounced up, got a little bit of basing, bounced off of it again, and then it gave us a good short entry. So once you got a good short entry, it gave you an opportunity to get into the position. And our target on that trade, our first target, was 38.20, and so allowing you to pick up 20 points in that position. So it was a 20-point move and worked out really, really well. So those of you that were in the live trade room last night, hopefully you were able to grab some of that move. Where do I think we're going from today? Well, I think there's a chance that we retest this area and that this area, old support, could become new resistance. And when we look at that as a possibility, that could be where we see price move. Pardon my bad spelling. Okay, so old support oftentimes becomes new resistance. So let's look to see if we get some sort of a candlestick reversal pattern in this region where we may see price turn. Now, we might actually turn from where we are right now. This is actually a really nice retracement of this move. We're at about a 23.6 Fibonacci retracement. I don't know that for certain. Excuse me, a 38.2 is probably what it is. If I include all of the wicks. If I put that 38.2 in there, bada bing, we're sitting right at a 38.2 Fibonacci retracement at the moment. And so this is oftentimes a reversal point. So look for a potential candle-to-candle entry off of this level right here if I get this video up fast enough. Next, the NASDAQ. So in the NASDAQ, very similar picture. We talked about a breakdown. The breakdown has occurred. We looked at a potential for a reversal somewhere down in here, although the NASDAQ level we didn't feel was as clean as the S&P level. The S&P does have a pretty good 15-minute reversal level down here, but notice that it's a confirmation because it's a counter-trend trade, but it is a really nice rally-based rally right inside this level. So looking at the NASDAQ, I think you got a very similar opportunity to get short. Now, the NASDAQ is the strongest of our markets to the downside, or you could say it's the weakest of our markets, as it is, taking it on the chin the most in this latest fall. So once again, once this candle prints, if it's still a reversal candlestick pattern, and it's got about 30 minutes left in this candle, if it's a reversal pattern, you can take a candle-to-candle short, or this line of old support may oftentimes act as new resistance. We did also look last night at the Russell, and we said if you're going to go bullish, the Russell's your best market to attempt a bullish play. And so the Russell did come into an area that we would consider a bullish opportunity. And that's actually where we've started to bounce. Now, I will say this about that level. We based in front of the level, and basing in front of the level is the kiss of death, which is part of the reason why this level didn't hold. But it's also not dropping as far as the other markets. So when we do come out of this most recent decline, look for the Russell to lead us out. Crude oil. So looking at crude oil. Now, I will say that crude oil last night, we talked about the fact that if we get basing in this gray box, 2 or 3 candles inside this gray box, then you're going to have an opportunity for a breakout. We got no basing in the level. So, question to you at home, is that a false breakout? The answer to that would be no, because it's not a breakout. It doesn't fit our breakout rules in that semblance because there was no basing there in order to give us the true breakout. Now, even if you did take the breakout, 1, 2, 3, 4, 5, 6 candles later, it had gone nowhere, telling you to get out at basically break even because the market wasn't going to follow through. And then overnight, kapowie, we came down hard on this thing, down below where our stop would have been. And so where that stop line would have been is actually where your next entry for a potential short would be. Now, understand that that short is going clearly against the big picture trend. So if you take that short that we just identified, it needs to be a confirmation entry. We always go confirmation when we're trading against the trend. Last market that we have to talk about today is gold. So in looking at gold, we looked at gold right here as a potential breakdown area. Now, we have just broken below that level with a bit of basing. So if you took the short, technically your stop goes above the prior pivot. Well, where's our prior pivot? Well, if I do this on a 15-minute, I can look on a 15-minute. So your tightest your stop could be would be right up in here. So the absolute tightest your stop could be is about 1691 if you took that breakdown for price moving, and the breakdown would have occurred about 2 candles ago. So 6-candle rule. Now, if you said, well, you know what, I'm taking it off the hourly breakdown. Well, in that case, where's your stop have to go? Your stop goes above the most prior pivot, which frankly is up here, right? Now, that's fairly wide for most traders, but if that's too wide for you, then use the 15-minute level as your stop. Just understand that your 6-candle rule also comes into play on your 15-minute level when you do that. When I look at gold for a reversal trade, I've got 2 levels that stick out, right? And I'm gonna mark both of these levels off, and I'm gonna call them level A and level B. Now, in this case, I like level B better due to the time of day that it was created. Level A is a better structure because it's closer to the pivot. Level B is better due to the time of day that it was created. Now, the downside of level B is that it is in the middle of this move down, and so I like to get closer to the pivot. So for level B, what I'm going to do is make that a confirmation and leave level A as a limit entry. All right, so those are our 4 major markets. Let's go take a look at our stock of the day by finding one that is not in the news yet, but it could soon be a stock in the news. For our stock of the day today, we're going to talk about ADP, automatic data processing. So ADP, they are the largest payroll provider in the U.S. Most of our payroll data comes from ADP. They are a behemoth of a company, and they release the jobs numbers on a regular basis. Now, they go the way unemployment goes, right? ADP tends to go the way unemployment goes because when we think about ADP, most of their revenue is derived from processing payrolls, right? They're essentially at their core a payroll servicing company. And so when I look at ADP and I look at what the jobs numbers are doing, the jobs numbers are coming down. The unemployment numbers coming down. And so that means that more people are going to get paid, which is more revenue for ADP. So from a fundamental standpoint, things make sense. If I take a look at their first quarter earnings this year versus their first quarter earnings last year, we see that they reported $1.52. Last year they reported $1.52. So their first quarter earnings report year over year was about the same, which is typically not going to be something that you want to see. But when you look at some of their competitors like Paychex, you'll see they also did very much the same, right? Actually, they've not recorded their first quarter earnings they've not reported their first quarter earnings as of yet. They've got a little bit of more time to come, but it's a very similar price pattern that we see. Now, when I look at ADP, the thing that I'm most interested in is if I go to the daily chart, I can see that as the market has come down, what has ADP done? As the market has come down, ADP has remained pretty steady, right? ADP has stayed much, much stronger. So relative strength of ADP over the market in general. And so it's setting up for a breakout above here. Now, one thing that, for those of you that have taken our tactical reinforcements class, for those of you that have taken our tactical reinforcements class, one of the things that we use is the CCI 100. And in the CCI 100, we are about to cross above the CCI 100. Now, we're using a slightly different variation of the indicator, and that's a really, really good indicator to tell us when a possible opportunity exists. And I think that we could see one here in ADP, combining the relative strength with the fundamentals, with the decreasing unemployment numbers, with the technicals giving us that CCI plus positive 100. To me, this looks to be a decent swing/position trade opportunity. Swing or position trade opportunity for price as it would break above, this 179, 180 region. Now, the question is, how do you play it? How do you trade that? There are a number of different ways to do it, and we're not going to dive too deep into options in today's picture. But looking at our implied volatility range, over the last year, we are in the lower third of the range. Frankly, we're near our lowest volatility for the whole year. So you could simply buy a call option if you were interested in buying a call option. Or you could do what's called a bull call spread, or you could just buy the stock. If you're comfortable with the stock price at 178, that does make a potential entry. So hopefully these are some things that you can take a look at today. If you have any questions, please send us an email, support@tradersarmy.com. Remember, this week is our free preview week. So if you're a free Traders Army member, you're going to get access to all of our live trade rooms. Today at 9 a.m. Eastern, 8 a.m. Central, Germán Casas is going to kick off our Trading the Open session. So make sure to join us for that. Until tomorrow, everybody, hope you have a great day. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.